I'm Deborah Borchardt, and this is your midday market update. Well, we've got all the indexes pointing higher. Everything is in the green territory. And what's interesting about today is, we got some fairly crummy earnings out of the teen retailers, Abercrombie and Fitch, for one. And yet the market is up. Yesterday we got some fairly good real estate numbers and we sold off. And joining me is Alan Valdes from DME Securities. So Alan, you and I were just talking about this, strange occurrence of events, how one day we had good information, the market sells. Today we had bad information, the market's up. Doesn't make any sense, but we were just talking about volatility. So let's go into that.
Yeah, a lot has to do in slow markets, light volume. You see a lot of volatility, and a lot of this is technical trading because remember, the ETFs dominate this, and they play off usually earnings. Right now, earnings are flat, except you mentioned two retailers came out today, basically small ones, nothing major. But if you look at the VIX, they all follow the VIX. The VIX was at 11 about 8 days ago. The market has since capitulated about 600 points, but 11's a point where the ETFs know it's time to start buying, start getting in again, because that's complacency. And sure enough, they're back in the market here. They're back buying this market right back up, and it's now we're raising up a little. And if you look at the S&P and the Dow, the S&P broke that critical 15,000 level yesterday. And even though the news was great yesterday, basically, but that's enough for the traders to say, hey, let's lighten up here. Let's lighten up. So they sold off in the S&P. 1650 was a psychological critical number. Again, we broke that yesterday. So those two numbers were enough to push the market down. Once you break those psychological numbers on a slow day, all you need is one or two stocks, big stocks, to change that momentum in the Dow and turn it down.
Well, as Alan mentioned, it is fairly slow, that the volume is pretty light. Of course, we can imagine that most of the traders are really kind of taking these last couple of weeks in August off. Really, the focus is on September, right?
Without a doubt. I mean, the feeling is among traders I talked upstairs, why get involved? The next 2 weeks, historically, very slow. You got Labor Day coming up next week. Quiet. A lot of guys take off before their children go back to school. But you got the Feds this year coming back, second week in September, speaking. Are they going to taper? So why run in front of a fast-moving train? If, in fact, they do taper, we've seen that play out so far just in talking. If they really do it, it's probably going to move the market downward.
All right, so what you're seeing today, again, is just more technical trading because, again, we did get some poor retail data information out, but the market is trading higher for now. That's Alan Valdes from DME Securities, and I'm Deborah Borchardt with The Street.